Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a weekly analysis for the week ahead of November 29th through December 3rd. Before we get into this weekly analysis, we want to have our disclaimer here for you, just to remind you that this webinar is for illustrative and educational purposes only. And if you wouldn't mind, also check out the book, High Probable Japanese Candlestick Patterns, written by myself, Theodore Keckstead, and make sure that if you haven't done so already, subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and make sure you like and share our videos as well, if you wouldn't mind, to help us grow the FTU Army. All right, let's go to our live action screen here. We'll take off the broadcaster, and where is our chart? We had our chart up here. All right, that's not it. There we go. All right, now we got the right chart. Okay, so DOGEUSD. Well, we're going to get back to the DOGEUSD, but first we're going to go to Dixie. Dollar index, as you can see, took a beating on Friday. What happened? Well, I'll tell you what happened. The dollar really got hit hard in the euro, and also by the pound and by the Swiss and by the yen. All the major currencies around the globe really hit the dollar took one on the chin pretty hard from each one of them. So as you can see, this is the largest downside move that we've had in months. Now we are coming off of a multi-month high from 2 days prior, so now be very cautious getting caught up in the selling frenzy. There's a lot of global news that is indicating a lot of COVID resurgence, obviously, with these variants. We know there's all kinds of lockdown measures that are popping into place. I would use caution no matter what. First of all, look at this as a dollar correction at first. And let's see how things line up as we get into our other Forex markets. So if you take the recent swing low up to this recent swing high that just happened just a few trading days ago, we'll take our 50% level right here and our 0.618 to see how far the dollar index could fall down. Now this is important because especially for like the euro and the pound, if they have relevant buy signals and target areas that kind of line up with this dollar index support target, that would help to give us a gauge as far as the new trend, as how much momentum is there possible in this current bearish slide. The overall trend, remember, for the dollar is a bull. One day does not a bear market make, okay? So be very cautious. Now, there's been definitely, if you were on the right side of these trades from last Friday, you are a happy camper going into Sunday evening's trade. I would not expect very much. Remember, the U.S. is coming off a holiday. Now, let's see what's going on. All right. Okay, so as you can see, the dollar index, the biggest element of that cross rate is the euro US dollar. Okay, as you can see, technicals obviously have it in the sell zone. Performance, except for on a 1 week basis, has been negative year to date, over the past year, 3 months, 6 months, blah blah blah. So the trend is obviously bearish. Indicators are oversold. What do we have here though? We have a high probable Japanese candlestick pattern that was confirmed on Friday's trade. Now, if you'll notice the little arrow there, that is Friday. It's a 3-day pattern that started from the low that was set on Wednesday. Thursday, you had a harami buy. It's a short-term buy pattern. It's usually meant more of a pause for a cause than a trend change. Now, this 3 inside up buy signal, however, that does signal a very likely change in trend. So what does that mean here? Well, that means that the buy signal level is the close from Friday, and we need to move. Let's move this over a little bit. Okay. And here's our stop. 111.83 right here. This here is our stop level area. So if you look at your risk, now obviously if we fell below 111.83, that would mean a new swing low. Obviously, right now, we are coming off of a newer swing low, looking to make a higher move high, if this buy signal is valid. So, if that buy signal is valid, definitely you're probably going to see a lot of stops resting around this 113.74 for all your weak shorts. Any any rise above 113.74, most likely momentum will build very strongly over at least 1 to 2 to maybe even 5 trading sessions, driving up this currency cross up towards 115.29. Now this is where you found a lot of support before we failed and had this big slide right here. Remember, support usually becomes resistance. Resistance usually becomes support typically when you have valid swing target areas. Right now, we have an upside target level here, buy signal looking for a rally up towards this area to begin with. So 115.29 puts us right up against this, what had been support. Expect this to be a very strong resistance area. Now, does it mean that we're not going to pierce it? Absolutely not. But most likely, you're going to see a lot of chopping going on around this level should we manifest this rally over the next few trading sessions. So right now, 3 inside out buy signal. If you want to learn how to trade this buy signal pattern, once again, go check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com. And you can get it in Kindle and paperback versions, soon to have a hardcover version of it coming out. So, and if you want to find out where to get that book, I'll give you a link right now that you can send to your friends and stuff. All right, give me 1 second here. We're pulling up our streaming, and that doesn't pull in. Okay, we got 2 viewers on Twitch, so we're going to send this link out to you guys just in case you want to learn how to trade these patterns. Here's a link to the Amazon for the book. All right. Okay, and by the way, for those of you that are on Twitch right now watching us, if you wouldn't mind liking and sharing our video right now, we would really appreciate it as well. All right, so let me send out this link on to you on YouTube. Okay, so you guys got the link. All right, so once again, if you want to learn how to trade a 3 inside out buy signal, you can read about it in the book, or you can watch this trade manifest over the next few sessions and see if it works. Now, interestingly enough, today we have a couple other buy and sell signal patterns emerging. We also have a continuation pattern. These are all patterns that will follow through with this short-term turn in the US dollar. So are we calling for a top from the past couple sessions ago? Short-term, yes. Are we bearish? Short-term, yes. We are definitely looking for a little more follow-through because the euro right now has got a buy signal. So that would be negative for the dollar index because the euro is the #1 component in the dollar index. Now, let's go to British pound, US dollar. Let's see what's going on here. So let's say the dollar index really is making a turn. It's very likely that with these other currencies that have reversed in a big way, that the pound may at least stay neutral. So if, it's coming off of a lower move low. It's the currency that definitely, while the other ones were turning already a couple days ahead of time, the pound had not done so. But it did set a lower move low, settled positive on the day. So we're looking for possibly, if we have a correction from a Fibonacci basis, we have your 50% to 0.618 right here in this area. This would be a nice little corrective area for the pound to gravitate to. That would also fall in line with the dollar index. Remember, where the dollar index is, the biggest components is the euro and the pound. So the euro already has a buy signal, kind of looking for a corrective area that would line up with the dollar index falling into that area that we had indicated from the beginning of this webinar. The British pound US dollar, should this correct to the upside and roll with the momentum of the other global currencies against the dollar, then we would say that most likely you can see a pop up to this 135.55 to 136.21 area. This is where you can see we had found support once again also in this market, and you see where a lot of consolidation happened, right, especially at the upper part of this range. Once again, this would be a perfect scenario for this market to correct up to this area here. Doesn't mean we're going to set a big bull rally going on for the long term, but definitely in the short run, we have a good potential to rally up to this area, probably set a range trade at that point going into 2022. Reason being is we have some, I mean, obviously COVID's on the resurgence. The question is, how much are the lockdowns globally going to influence things? Is trade going to slow down even more again? Is international travel restrictions going to start to come back after just having been opened up? I mean, people from the U.S. are finally allowed to go to Europe. Now all of a sudden they're locking down again. So what impact will this have on the economy and other currencies? This would also pan out where if we do get this correction right now against the dollar right now, meaning dollar bears and bullish to major currencies going into the end of the fourth quarter, the end of 2021, by 2022 we manifest if we are, excuse me, not manifest, if we mainly are trading in this area right here for the pound and like the euro and the dollar index consolidating on those pivot points, that would give us the area to either base, where the dollar will gain a lot of strength and all of a sudden have the big momentum going off to kick off the new year, or it's the pause before the dollar really starts to take a tumble in the beginning of 2022. We do have a lot of things to look forward to in a negative capacity, which is, I guess, no matter what, we know it's on the horizon. Chinese tensions globally are growing. The odds of them invading Taiwan and making an attack on them at the very least are very likely. This is not a conspiracy thing. We know that their military drills, if you will, tests have been pushing the gauntlet. And now with North Korea also, I would be very leery of strength as far as with the yen. Even the Australian dollar is going to be very tenuous at best. So we're going to see a lot of swinging going on, and we'll have dollar strength in certain currencies. The question is, will it be a dollar bull all across the board, or will the dollar be under siege? And it's going to be very interesting. It's going to, as a currency trader, I can't even begin to tell you. If you think that we saw some swings over the last year and a half, from my experience with what's going on, I would say that 2022 aims to please on as far as volatility for currency traders. I'm not saying it's going to be an easy ride, but I definitely don't think we are going to have a range trade market, which we have had for sure in the past. Like, that's something we have not had for a couple years now, where the trends in the currencies will remain, I think, where we are definitely going to have sweeping trends, which is nice, especially when you trade something like the British pound US dollar. Speaking of the pound US dollar, let's go a little precursor to some other currencies. British pound AUD. This is something that exploded to the upside. Now, isn't it interesting? The pound set a low, short-term low versus the dollar, and settled positive, but is at the bottom of a trending lower move. To try and say that its bottom is really hard. But look at this. British pound has had strength against the Australian dollar for a while, and the Australian dollar is falling very hard against the dollar. So that's where you're seeing this very interesting show of strength. So the pound has strength versus global currencies. That's why I think that yes, on Friday's positive close there and very tight range, that we may see a big move to the upside sometime between Sunday night tonight and into Monday afternoon tomorrow. So right now you're seeing strength here in the pound, weakness in the Australia. Wait till we get to the Australian dollar currency cross. You'll see why. All right, now let's go to the US dollar CHF. This one, talk about, I mean, it was trending higher, just bobbling here with this double topping, and now shabam, boom, did this get whacked on Friday. We're coming off of this higher move high from this recent uptrend. Talk about how I always say markets go out like they come in. Wow, the steepness of this slope. In one day, we came all the way down to 92.14. I would key off of these levels. The Swiss could be range bound. If you look at how it's been swinging, this just hit the upper parameter of where resistance seems to be very strong, and all of a sudden in one day it came down to where support seems to be there. Like, this has been an area where, as you can see, resistance, then boom, it comes up, becomes support, holds support, and then boom, fails. This is the explosive level above we're right in the middle of this pivot point range. So I would key off of the low from Friday. If we take out this 93.73, then that means the US dollar is a bull, probably versus all the other markets as well. Until that situation arises, it could be a big choppy range trade here for the US dollar Swiss. We don't have a signal here. We have a very, very bearish slide that happened on Friday, but we're coming off of a higher move high. The trend is, no matter what, a bull. We do not have a reason, even though we had this violent sell-off, to be on the bandwagon. And the Swiss may be overdone. Think about this. I've been talking about this for weeks, even on some of the excerpts I do on tfnn.com on Wednesday mornings at 8:40 Central Standard Time. I'm their Forex consigliere, if you will. We talk about also the different futures markets and equity markets. And one thing I've been stressing that's been a dynamic that most of the pundits don't talk about is the volatility in the as far as range for the Swiss has been so much more than the euro on any given day over the past 4 to 5 months now. Now, relative to the pound, in that relationship, it's definitely larger, but no matter what, the Swiss is hard to outpace the pound and is in a range on any given day because the pound just has it's one of the widest range currencies out there to begin with, even when it has a tight day. But that being said, Friday is a day where you have to wonder. It's like uses that famous Greenspan term. Is it irrational exuberance as far as what happened with the selling off on that market that day? Overall, the Swiss is a flight to quality currency. Now, this is where you have to look at this, where if the dollar truly is setting a short-term top, meaning it's going to trend lower for the next few sessions to maybe even the next few weeks into the end of the year, that means it would lose a lot of ground versus the Swiss. Remember, the Swiss, the flight to quality currencies out there, number one is the US dollar. Then it goes by your trade zones, where the Swiss is for the European trade zone, especially now that the UK, remember the pound has still always existed during when it was part of the EU. They had a sovereign currency, but it was part of the EU. Now because of Brexit, the UK is now solely on its own. And the EU no longer has the backing of the UK as far as on a monetary support level. So that's different. There's a difference and indifference that now exists once again in the European trade zone. That being said, the Swiss is a flight to quality currency. It's the one neutral currency there, and it's definitely the flight to quality. It's a currency of economic strength. So be very cautious being bearish on the US dollar Swiss. This market right now is in an overall bullish trend. Just because it is having a short-term violent sell-off of one trading day does not just mean that we are now bearish this market, especially even if the dollar is a bear versus all the other currencies. Be cautious, because when the dollar turns back to even just a bullish correction based on no matter how far it falls, whether it really tanks and drops significantly over the next few sessions, the next few weeks, or if this is truly just a short-term bearish correction, whenever this dollar does turn again bullish, this US dollar Swiss most likely will violently turn to the upside. Don't discount the fact that you could have a bullish run like we've had back in this little area here. So real quick, I just want to see on Twitch, do we have any questions? All right, we have a couple viewers, but we don't have any questions out there, but that's all right. So we just want to make sure that for those of you that are doing it, that are watching this, that you are giving us a little shout out and a little tweet, if you don't mind. We would appreciate it. All right, so US dollar Swiss range trade, and as you can see on the technicals, neutral. Overall performance very strong, once again confirming that the US dollar Swiss is in an overall bullish market. Right now, it's in a negative way just because of the violent sell-off. Like we're talking, it absorbed a lot of trading range in just one session. But remember, that's because of the news that's hitting the market. I think that algos, and it was a holiday market. One thing, if you look at my my interview on tfnn.com on last Wednesday prior to the holiday, I warned all their viewers, and I always stress this from all the years in the business. When it comes to holiday markets, take the day off. It's a holiday. It doesn't matter that the machines are on. Stay away. Now, if you have a position, you have to monitor and adjust it. You do what you would normally do. You discount the fact that it's a holiday, but you do whatever happens, happens. Do not enter a trade in a holiday market unless you absolutely are following a systematic system that you need to do that. Otherwise, stay away because violent moves happen erratically because of very thin volumes. So, but anyhow, remember, if you treat trading like gambling, like trading holidays as gambling, then you're going to have a gambler's results. If you treat trading like a business, which you should because it is, you won't trade on holidays. You will only maintain positions because you are aware of the fact that, oh, look, here was Friday's trade. Everyone in America is on vacation. Look at what happened. Let's look on the hourly basis when this all happened, too. Here's American hours here, right here. This is the this is the afternoon. Here's the morning. This is when everyone's sleeping in America, and then they wake up, and then there's that the market's closed. Yeah, this is this erosion overnight from Thanksgiving on into the Friday's trade right there. Everyone in America is closed. Asia was open. Europe opens. They slam the hell out of this currency. Big sell-off. Machines start kicking in. You can see on any given hours lots of erratic spike. Look at this. Down, 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 almost replaced the whole thing. I mean, this is all algo trading. You should not be involved. So, all right, irony of it all, we have our next high probable Japanese candlestick pattern. This is now considered a 3 inside down. This is the opposite of the euro US dollar signal, which was a 3 inside up buy signal. Remember, so this is where you rally into a high. The following day is actually a pause for the cause short-term sell signal. But usually it's more of a neutral where you get choppy, where you hit support. You don't really sell off, like definitely not like this typically. But when you do have this, that's when it becomes a 3 inside down sell signal. Now, usually when you have a 3 inside down, it would settle somewhere around this area here, maybe even down to even 114. But to have such an extreme break like this and settle near its low, that is a wowzer. So if you happen to be the short-term pessimist, which taking the low-risk sell against the high from Wednesday with this Harami sell signal on Thursday afternoon, boy, did you get a lot of bang for your buck. You know, like this is where you look at the close of the next day as you roll into the weekend being like, wow, that just really made up for a couple of losers in the past because you already blew through all your price. You already hit your initial short-term downside target level. Now, and that would be just from the Harami sell signal. Now you have this one. This sell signal level here is all the way at 113.21 starting off our week, especially if the market opens a little higher above here. You have a really good chance to catch one more wave lower down towards this 112.34 to 111.57 area. This would be the initial downside target range. Remember, the US dollar yen is in a very big bull market. So if this is just a short-term dollar correction, it's going to be really tough to get the US dollar yen below 111.57. The only way that you're going to possibly see this is if you have a really big rally in the interest rate market in the United States in the 30-year and the 10-year. And a huge sell-off in oil. Now, why are we going to talk about the interest rates in oil markets? Well, because they actually have an impact on the U.S. dollar yen trade. Oil has a big influence on the Japanese yen. And then the fact about interest rates is another thing also. Now, interest rates are a function of currency pricing. So for all of you people out there that are like, why is he always talking about interest rates? Well, I'm going to keep on hammering it in your head that because interest rates are a factor and a variable of currency pricing. So for US dollar, it would be the US 30-year Treasury bond and the US 10-year notes. Now, the pundits will have you look at the 10-year the most. However, the 30-year bonds are really the market you need to watch the most when it comes to interest rates. As you can see, the bonds had a huge rally on Friday. Okay, now they're coming off of a low set on Thursday. So this started here on Thursday, trading at around 159 handle right here. They settled at 162.28. That's just below 163. For those of you that are not futures traders or treasury bond traders, that is a big significant move in the bond market to have in over the course of 2 days, also in a holiday market. Okay, this happened going into the close, all right, of the week. Now if you have a radical move like that, meaning interest rate market goes up in price, that means interest rates go down. Okay, there's an inverse relationship between which direction interest rates go and interest rate derivatives or cash markets trade. Okay, so it's an inverse relationship. So when bond prices or 10-year note prices go up, the rates go down, and conversely, when those markets go down, interest rates go up. So right now, that means that when interest rates are going down, that puts a lot of pressure on the US dollar. The US dollar becomes bearish. Get that? All right, so we have confirmation from the 30-year note. The 10-year would also be very similar. We'll go to this one. And once again, from our navigation bar, you can get this information. Now, futures markets are always in delayed every day. You can't have them live like we have in real time. All our Forex data is in real time. And we have other equity in certain markets that are in real time or close to real time because we can by law. But with futures markets, you have to pay for the data. Otherwise, it has to be in delay, just to remind you of why that is what it is. So we went to futures to get to the 30-year and the 10-year note, in which we can look at it once again. So here's we looked at the 30-year, now we're going to look at the 10-year just so you can see, once again, confirmation of interest rate movement set on the weekly. We'll go to the daily. This one as well. Now this one set, look at this. This here is also a high probable Japanese candlestick bottom. Now this one, as you can see, is coming off of a lower move low. This is divergence in the interest rate market. Okay, this is huge. I need you to understand what's going on here. This is a big buy signal. So this is bearish for the dollar in the short run. Okay, this interest rate rally here is huge. Remember how I said that it went from 159 to 163 almost? That's a $4 move. Here's 129.15. So that's basically right in the middle of that price handle of 129. Went all the way up to a high of 131.10. That's almost a full that would be a whole $2 move in the 10-year. Now the 10-year is a shorter term rate than the 30-year move, so it doesn't move as much in dynamics, so it won't have as big of a move. So in other words, you'll have a price move that's bigger in the 30-year than you will in the 10-year. Now, once again, both of these put a short-term bottom in. That is just like the dollar index. Remember the dollar index? It had topped out. Look at this. Just like how those interest rates, they did it's an upside down chart almost. This market turned radically, as you can see, this big sell-off that coincides with the interest rate. So the pricing is there. You have the confirmation of all these trends that we've been talking about, okay? So that is huge, all right? That brings us back to the US dollar JPY. So we have the dollar index, which is supporting the sell-off in the US dollar yen, meaning that it's very likely that we can get down below this 112.34 and pressure this 111.57 area, okay? Then we have oil, which we're going to bring up now. Let's see what's happening with this one. This is the one where it's also dictating a lot of what's going on with the trade going on with the US dollar yen. So we go back to the markets tab here. We're going to go to our commodities page here. Now here we have a listing of all kinds of grains, meats, energies. Right here you go to crude oil, and this will pull up the chart necessary to take a look. Look at this. Look at this sell-off. This is huge. We have not hit. Look at the price of oil in one trading session. Look at what happened. Look at that. We went from that's a $10 move. This is a huge sell-off. I've been calling for $100 a barrel oil for a while. This is just, now this is where you got to use caution. Watch out. If the oil market snaps back, which I think it will, this is because of the whole Biden pushing out the U.S. reserves. What you don't understand, and which the media always downplays, is that when we touch the reserves, it doesn't mean a thing as far as gas pricing. It is so nominal when you look at the consumption for on a national level, that it is just a speed bump. You're talking about a penny for a day, literally. And I mean, that's a little extreme, but it's a little more than a penny for a day. But it's what it means. This is all news reactionary, guaranteeing right now you have all these bears. This was a perfect profit taking time for people that have been long. Okay, so believe me, this isn't heavy shorting. This is people taking profits, and you have a lot of, I'm sure, buying pressure that people are willing to take some heat on this trade because the oil is in a bull market. This is just a short-term sell-off, and this will be where I think you're going to see a consolidation of oil first. You're going to see the interest rates continue to rally, meaning interest rate pricing going down. This will put pressure on the US dollar, which once again, this bodes well for the yen. Now, if oil stabilizes, this is about where you're going to see the US dollar yen sell off to. It's most likely not going to continue lower unless you see an extreme rally in the bonds, which in the 10-year, which I don't think you're going to see. I think you're going to see a continuation to the upside, a little follow through, but not much over the next couple of sessions to even couple of weeks. Only if you have a radical trend follow through in those markets would you see the US dollar yen most likely get down to this 109.32 area down around here. So it's a very good market to trade. Expect a lot of swings. If you are short, or if you're short selling into this market today, sometime tonight or tomorrow, somewhere around the 113.21 or higher will be a great area to catch another slip down towards this area over here. All right, now let's look at the AUDUSD dollar. All right, well, with the crashing price of oil, that doesn't help Australian dollar. With the rallying interest rates, however, it should, but it's not. So in this case, why is Australian dollar, US dollar falling to through the floor right now? I mean, we're looking at hitting multi-month lows no matter what, and we almost hit them on Friday. So, overzealous sell-off because of the American markets being closed, possibly. The sell-off in oil definitely is adding fuel to the fire for this one. Once again, the interest rates should be causing us to slow down and not be like this, but it's not. So since we don't have that neutralizing of impact, it has to be the lockdowns and what's going on there. So Australian dollar, US dollar, forget about it. We had this big rally up here that ended at the end of October. This slide that we've had through the whole month of November, this is not that steep of a slope. Granted, Friday was a very harsh sell-off, but I think that what you are seeing here is just the beginning of something that's going to continue longer. The overall trend here is lower. If we take out this multi-month low here, we're treading right above key support right here at the 70-cent level. Anything below 70 cents has us trending down towards 65, and I wouldn't doubt that if these lockdowns persist, that this low here in 2020 and during the height of COVID here, where we got down to this 55-cent area, we could see this level here again, and we could see this level probably by springtime. So right now you're looking at a very good chance that it's a sell rally forecast. If you can get a chance to sell it higher than it settled at on Friday, it's a low risk sell. And as far as how far can you ride this trade, if you are already short and you work it, I would say you have the potential to ride this trend lower for the next not just 3 to 5 trading sessions, but at least the next 3 to 5 trading weeks, if not maybe even the next 3 to 5 trading months. That would put you out to, let's see, let's go March 14th, let's go out to March 28th. So 3 months from now, we could literally be down here, somewhere in this range. This is our target right here for Australian dollar, US dollar. Especially as tensions with China seem to grow globally, and if they really do start to kick up their heels militarily, which we think they will, you're going to see that continue. Now, in the same trade zone, New Zealand dollar, US dollar, as you can see, this one is not in the same necessary trend that Australian dollar has been in. Short term, yes, it is bearish. Short term, it is definitely very negative. The momentum is very strong. It is not as bearish as Australian dollar, US dollar. We do believe that you're going to see newer move lows over the next 3 to 5 trading sessions, maybe even the next 3 to 5 weeks, just because there's a lot of other dynamics with them as well. If the lockdowns really are going to continue to grow in Australia, it looks like they're also going to continue to grow extremely in New Zealand as well. That is negative. As you can see, the performance as far as the indicators here, this market even though it's not in a violent negative bear trend like Australian dollar is right now, all the technicals are bearish. 1 year all the way down to 1 week performance, everything is all negative. So do not try and catch a falling knife. Look for reasons to sell this, rallies to sell more than breaks to buy. Okay, that would, I would say, would be your safest method of trading New Zealand dollar, US dollar. All right, US dollar, Canadian dollar. Here comes our next buy signal. So once again, a high probable Japanese candlestick pattern, the rising three methods continuation pattern. So this is a 5-day pattern here. We peaked out here with this rally here, made a little higher, move high on the day, but you had this negative closing bar, and the body is consumed within the first day's trading range. Then we have a lower trading day again, followed by a third lower trading day. Then boom, the fifth. This is the key. After we had this 1 day up, then we have these followed by 3 negative days. The fifth day, we had, boom, this big rally that took out the high from the first 2 days of the trading pattern, and then we settled all the way up here. This is what we call a rising three methods continuation pattern. It's a continuation pattern because instead of being a short-term pivot point pattern, this one confirms momentum is strong enough in this trend that it should bust through resistance and bring this trend up much stronger, meaning that you may have exhausted half of the trend already, but there's a good half of it more to go, or you may have still exhausted 2/3 of it, but there's a good third of a trend to go. So this is something where you're not looking just to make a new high by a couple pips or maybe even a half a buck. You're looking for an extended move to the upside. So how far can this go to the upside? Well, here's the thing you got to look at too, which is key. If you look at your just normal trend dynamics, we got to go. Let's take this out. I'm going to show you something here. So we take this high through here. Now here was our head and shoulders sell pattern. That's worked out well. We came all the way down to this bottom and hit our target range really nice. Look at this. This is interesting. So here's our downward sloping trend line, keeping this corrective move to the downside intact and making us think that, well, the market had rallied up. It set a corrective move. US dollar strength versus Canadian dollar cannot exist, most likely because of the oil and the tensions between US and Canada. Well, oil sold off significantly. That's big strength for the US dollar. Remember, the dollar index, US dollar is getting hit by everything else. This is strength in the US dollar. Remember, you're not always going to be bullish or bearish one currency against every other currency. Because of the price of oil slipping, because of this continuation buy signal here, continuation buy pattern, this confirms strength for the US dollar in this cross with Canada. There's weakness for the US dollar overall, but this is where there is strength. Okay, now obviously if there's a turn in oil and it starts to rally, I would say you're going to probably see a cap very quickly on the US dollar Canada. Reason being is because interest rates should make the US dollar Canada actually be hitting support. But because of oil, which is big for Canada, hitting a $10 move, that's overwhelming as far as the support for the US dollar versus Canada, because Canada's strength is in oil. So the price of oil took a like 15% hit in just 1 day as far as value. That's huge in any given day, let alone in a market such as oil, which has a ripple effect because in so many other market mechanisms around the globe. Irony of it all is that the oil sell-off is because of the lockdowns. It's not because of lack of demand, because right now you have supply issues. But then if all of a sudden people aren't going to be driving or using gas and whatever, the supply issues no longer become an issue, correct? So it's very interesting how the oil trade is literally being right now. Is it the dog wagging the tail, or is the tail wagging the dog? This is the case of the oil being the tail wagging the dogs all around the world right now. Very interesting how these things play out. If you have any questions about this, definitely leave some comments and we will answer them. Read the book, High Probable Japanese Candlestick Patterns. We give you a little bit of insight into these things. And keep watching our videos and sharing them, because we talk about these things and give you insights that you just aren't going to get other places. And we give you the technical variables. We also give you the fundamental variables that actually are important, that are valuable and useful, and give you a good insight into what is really shaping up where money is moving from one market. Money's always moving. You want to chase the money. Where's big money going? Where is money? Is it leaving? Where is it going to? That's how you make your profits in the market. So follow those things, and it will help to reinforce your trading business. All right, now let's get to the cryptocurrency space. For all of you that have hung on in this video, we've been dwelling on the Forex markets, but we had some big patterns, big move in the dollar to go over. Now let's look at Bitcoin here. Bitcoin has been selling off over the past couple of weeks. We had this kind of head and shoulders that was confirmed. This gave us a nice little sell-off. The question is, like right here, this could be a shoulder here. This is a head here. This is a shoulder. This here is our neckline, as you can see once we failed. Boom, 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 but we came down to a good support area. So let's just double check that as far as where we're at. All right, so if we look from the last major swing low to the last major swing high, and we go to 50%, so we'll go to right here where it was, oops, a little higher, and then here is 0.618. Okay. All right, so there we go, Fibonacci. All right, so 50% level, we're bobbling on this from the last couple sessions, and as you can see that today's trading, for Sunday, we had actually made a lower move low. Now we are positive on the day. Now this was interesting because this kind of coincides with, we have a, oops, where is, okay, I don't know. Oh yeah, Ethereum. We had a buy signal here that was triggered a couple days ago, and as you can see in the past couple hours, we've held above our risk level. We're back above our buy signal level. Technicals are, as far as performance, are neutral. Technicals are very bearish. We have a short-term buy signal. Bitcoin is like, we can compare it to the dollar index as far as for cryptocurrencies, even though it's not an index. But as far as strength right now in the market and weakness, a lot of people are watching Bitcoin and Ethereum. So Ethereum, we have a buy signal. So if we tie that in with Bitcoin here, that's probably giving us a short-term lift. So as Ethereum is getting a little boost, people are looking at Bitcoin seeing strength, or are less likely to sell off Bitcoin when Ethereum is rallying right now. So it makes sense. There's a little bit of a, it's hard to have divergence between these two right now, especially when the trading is slow. So since the trading is slow, a lot of people, I think, like I said, are watching one. As long as one is trending, is starting to spark a move, that's where the other one will go. Not that we're expecting a big rally or anything, but yeah, I think right now you're more likely to see a move emerge because of Ethereum versus Bitcoin. So right now, as far as where our targets and where we're looking for this market to go, well, from this high and from this head and shoulders, our target range was right down into this 54,416 down to 50,779. So we've hit the upper range of our buy zone. Could we get lower? Absolutely. Have we set a bottom? Maybe. I don't know. We'll see. Right now, I would use caution selling Bitcoin at this area and looked for a reason to buy it even from here. For buying it from here where it's at now down to 50,070, or basically 50,800, seems to be a good value as far as looking to jump back in and wait for the next move higher. And since we mentioned Ethereum, let's go to ETHUSD. So we showed you the hourly buy signal. We have this on a daily basis. You can see the overall trend is up. So we're coming off of where we had made a higher move high, higher move swing low. Then we made a lower move high, putting this market in neutral. But then on Friday, when everything sold off in the regular markets, this thing did something also. It came off of a lower move high and made a lower move low, which then puts this market into short-term bearish, intermediate-term neutral, but longer-term, it's still a bull. So I would key off of the low, this risk level here of 3,900, or 3,900 basically. Any failure from there has this market on edge, looking for a little bit of digestion down into the mid 3,000 areas, like 3,600 down to 3,400. We are not looking for any major sell-off. However, trading above 3901 does have this market where, because we do have a buy signal, remember from the hourly, this buy signal of 4,088 with our risk level of 3901 has us targeting 4,503, which is just below the last swing high. if we're in a range trade situation here, this would be a good area for us to rally back up to and expect a lot of resistance. If this market is consolidating and running out of gas, odds are this will put a cap on the rally and we'll see a lot of consolidation, kind of which if you look at, we've been doing for the past half a month, for the last 2 weeks. We basically set a lower end of our range and upper end of our range, and you can see Friday's trade had all consolidated within inside of that range. If there's more of the same, this is where you can expect these levels it to be very tough over the next couple of sessions and the next couple of weeks. However, if we get above 45.03, then remember that we're coming off this major swing high of a bull trend. This low from Friday could be just our higher swing low on the longer term trend. If that's the case, then any move above 45.03 scrambles the shorts, and the bulls will be off and running, looking for another run up through the highs and maybe a peak at 5,000 sometime between now and the end of the year. We're bullish Ethereum long term. I'm looking for a better place to buy as always. And I think that it's possible. So we'll see what happens over the course of the next couple of sessions and see where we go with that. All right, so Ethereum, definitely bullish. We have the buy signal. We'll see what happens. Now let's go to XMRUSD Monero. Do we have any questions about the cryptos? Let's see. We have none on Twitch. And we don't have any questions on YouTube, do we? No, we don't. Let's see. Is there anybody on the chat on YouTube? There is nobody on the chat on YouTube. Okay. All right. No, there's going to be no questions on the chat. All right. So XMRUSD. Monero, the longer term trend obviously is down. We have this downward sloping resistance line. We're coming off of a swing low from Friday extremely. As you can see how it sold off big. And then this is where support is. Now, we have 220, 225. I've been saying this for a long time, is a really good buy level. Anytime it's around 220 or lower, Monero is a buy. Now, as far as full value of what it can go up to, it can go to there's no limit. However, I think as far as rational sustainability, the range for Monero is somewhere between 210, 220 up to around 330 to 350, I think is solid. Anything above 350, you start to run out of gas. It's a great technology. It has, I think, a lot of sustainability as long as the pricing is between, basically, like I said, 220 and 320. I look at as this. Anytime you can buy it from 250 down to wherever, that is a good place to look to nibble in and get long. Anytime you can get the market in Monero somewhere definitely above around 290 up to 310, 320 for sure, take a profit. And above there, I would say take even some more profit. And I mean, obviously, it could always go to 100,000. Who knows? And you would want to still keep a long position in there. But as a whole, I think you're less likely to see any overall major bull trend in Monero when it comes to trending versus like Ethereum or Bitcoin and some of the major high flyers. This technology is sustainable, but the only way it's going to stay is if it stays in that range. Okay. Now, DOGEUSD. There's still the Doge bulls out there. Boy, look at this thing. It just continues to get crushed. So every time you think you can get this thing up above 30-something cents, shabam, it just trends lower. And even now with the other ones looking to buy, this one's looking on its lows. Doge, I've been saying this thing is a dog. I was hoping it would get back above the 30-cent area up towards 40 so I could liquidate my whole position. And now it's just like, okay, I don't own that much. I'm just going to hang on to it because it's most likely going to zero, but you never know. One day there could be some kind of pump and dump spike where this thing gets a rally above. We could go have a 50-cent move, a $1 move for a day, so that's where I think it could happen. So is that going to happen? Probably not, but I would say that what could bring it on is if Bitcoin gets a big rally and hits that 70,000, 75,000 area and blows through it up to say like 85, 90,000 when 100,000 is within its sights. And then I think just on the pure bullishness of the cryptocurrency market, you could see Dogecoin get back up to that 30 cent to 45, maybe even 50 cent level. I would say that that would be the end of that trend. I would use a lot of caution. If you see those highs again, I'll tell you what. Like I said, I'm dumping because I don't. It's just an opportunity. This one has more of an opportunity to go down back towards zero than it does have any longer term trend overall. Technology is not sustainable. It's a pet rock. It's only for people that like it. That's it. That's the only thing that's going to keep it around, is the people that are so vested in it that they're going to keep it running, holding. But it's just a pipe dream, and then they're just waiting to figure out a way to market it once again, and then sell out their money. It's the bigger fool theory. So right now there's enough fools that have enough money in it and heavily invested in it that they're trying to find themselves some more fools. But they may be the biggest fools of them all, and now they got to find if they are, they're not going to find anybody foolish enough to follow through with that. So okay, so we look at the Doge USD as far as where we are with our cryptos. Let's go back to the Euro US dollar, and on that note, remember this is where we started with our Forex analysis after the dollar index. This is a key one to watch. And I would check out this right off the bat. Watch the euro, watch the yen, watch the pound, and see what goes on with those markets. Remember, we had the signals also in the U.S. dollar, Canada also. We had three big trading signals that line up with the dollar index reversal, the short-term correction in the dollar. So that would be the euro, U.S. dollar, 3 inside up buy signal. We had the U.S. dollar, Japanese yen, 3 inside down sell signal. And then the U.S. dollar, Canada is the one where we do have dollar strength because of the rising three methods continuation pattern. So that is where we want to see. You have your focus to start this week off, and we want to thank you very much for all your time. Please leave comments in the comment section on our YouTube videos and Twitch videos. We will answer them and reach out to you and talk about them in our next videos as well. And remember, if you haven't done so already, please share and like our videos as well. Pass them on to your friends. We would appreciate that. Help us grow the FTU Army. And if you want to learn how to, we put the link out there for you for the Amazon, for our book on Amazon. Also, we want to remind you for our book, once again, you can reach it. It is available in paperback and Kindle versions. On our website, you can go to on our navigation bar. We have a whole web page dedicated to the book, giving you little excerpts and things like that. But just remember, also subscribe and like and share our Forex Trading Unlocked YouTube channel and Twitch channel, and or whichever social media channel you are on watching us. And check us out on LinkedIn too. We are the 4th largest Forex trading crypto trading company page on LinkedIn in the world now. So we have major companies that are way behind us. We have a lot of interaction and growing content. We're evergreen, and they like us a lot. You should too. So check us out there when you get a chance. And remember always to check out Forex Trading Unlocked, your key to online trading, whether it's the Forex space, the crypto space, derivative space, you name it. We help you out with all of it. We help you understand what's really going on out there.